Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at what happened during the week in the markets last and how we can plan for a better trade for the next week, right? So May 16th, Monday, tomorrow, 2022, that's what the analysis is going to be for, right? So let's look at the charts, right? So this is the weekly charts of the Nifty and the Banknifty that you're seeing here, and clear bearishness, wide range, right? And Banknifty also you're seeing a clear bearishness, wide range bearish candle is what you see last, and you can see that both of them are very close to a previous signal but not breached it yet. Banknifty also very close, not breached it yet, right? By closing basis it is already breached it. So clear bearishness can be very much evident. So 1, 2, 3, 4, 5 weeks of up move, and then 5 weeks everything is lost. 4 or 5 weeks everything is lost. Like this is like a 15% and down a 15%. This is like a 20% down a 15-20%, right? So that's exactly what it's retesting the previous support zone. Remember that support zone is also previous resistance where it broke out from, which is now considered to be support. So there could be a change in parity, and then there could be consolidation here, or there could be a bounce also that is possible here, right? So big 4 weeks and markets at retesting the previous levels is what we are seeing, right? Let's put together the numbers. So daily candles, you'll see that last 2 days it is this kind of consolidating and deciding whether to further break down or stay there or move up. That's exactly what is happening here. Banknifty also. Banknifty is is little further away from the previous single, but Nifty is very close. So any move further down would mean it's making a new swing low, and then we don't know how long it's going to take. Right? So another view of that in the Nifty, with the moving averages and all, you can see that's quite far from all the moving averages. 200, 150, 20, everything, right? Very, very far away, right? And it's a falling trend line. You can see that there is a head and shoulder pattern which has already met the target, double size of the head. That's already met with, and it's clear breakdown that has happened, like the Bollinger Bands, right? Clear bearishness indicative with the price volatility expansion there, and no doubt about that. And that's it. How much point did we lose? Like nearly 4% lost. Previous week also 4% lost. So 620% on Nifty and 4.3%. That's 1,500 nearly lost in the Banknifty last week. So wide bearish candle. 5 weeks 15% lost, and 5 weeks 15% gained, and 5 weeks 15% lost. That's exactly what happened. It's exact. Even on a daily time frame, it's clearly evident the volatility and the zigzags that happened, right? So all the remaining information we already know. And look at the support resistance levels, and it's in a sliding trend line channel. Clear, So the next immediate support will be 15,500 to 15,650, and then above that you have. Right now, it's at a resistance at 15,850, 15,950, match 16 retracement level, which is already breached. That is the first one that it just converted. And above that, 16,200, 16,350, 450 for match 50. Then 50. That's a gap resistance there, 16,550, 16,450, and 16,700, 750, and then 16,800, 16,900 for match 38 retracement level. That's Nifty. Banknifty similarly, you can see that next support would be the previous swing low, which is coming to near to 32,100 levels. 31,800, 32,150 is where the zone of support is in, and before that also you have a support at 32,400, 32,800 levels, which is not a breach, and then above that, right now it's at resistance 33,600, 34,000, which is a Fibonacci 61 major support zone. It's breached. Now then, if that's recovered, then you have 34,350, 34,750, then 35,000 nearby levels of match 50, and then 35,600, 35,900. Then above that you have 36,300, 36,800 match 38, and then above that you have a gap resistance 36,900, 37,000, and then 37,500 levels, right? That's the support resistance that you can see on the Banknifty. Moving on to the momentum and trend analysis, you can see it's clear bearishness, falling bearish momentum that you can see, not only in the sideways but also in the medium term. That means the daily and the weekly both are showing that the trend is falling, right? The momentum is falling, and it's clearly in the bearish zones below 40 RSI, and ADX indicate. So this is what it's clearly falling, and falling momentum, and it's not only in the daily time frames. It's not only in Nifty, it's in Banknifty also. It's in the weekly charts also. So clear bearishness everywhere. ADX indicator also showing the same thing. It is bearishness that is there the weekly as well as the daily. So clear momentum bearish and trend bearishness, right, on both the indices, no doubt about that. Volatility is far away from the 20, it's 23.8. Nearly 20% of spike happened, hitting to about 25 last week, and finally it's set at 11% of spike. And 23.8 is very high, and it almost touched 25 minutes. There is a lot of fear and regrets in the market, right? Moving on to the open interest data, you can see that it's a long unwinding, that the futures open interest is showing. Long unwinding is bearish. People are long are thinking about going short now. Unwinding the positions. Remember, the options futures, the options open interest data is for the May 19 weekly expiry. The put call ratio is showing that 0.48 and 48 clear bearishness. Put call ratio clearly saying bearish, and so is the futures open interest. Let's see what's the options open interest is showing. That is also clearly showing that huge number of call rating is what is dominating everywhere, although some unwinding can be seen the OTM level. So look at the range 15,000 and 17,000 with the the option writers are seeing where the levels 2,000 points gap, and 4 days for the expiry, and 14,700 and 16,800 is the highest put and the call rating, second highest support and resistance that can be seen, that's it. And look at Banknifty 32,500 and 34,000, which is also a wide range of put and call rating that is seen where supports and resistance can be seen. 32,000 and 34,500 is where the second level of support and resistance can be seen. Put call ratio and futures OI we already seen it's bearish, so open interest clearly indicative that it is a very bearish, and it's at the bottom. 0.4 PCR is the bottom, so since it is at the very low, the next day's opening may not be making further plunge, but it may consolidate before it decides where to go. But clear bearishness evident from the futures and options open interest data, right? Sectoral watch, if you see, it was a down day across sectors. Week wise, if you see, it's 3.75 as an IT sector again for metal, 12%, 12.4% down in last week. Metal is the biggest hit has got on the metals, which is one of the strong sectors which is holding the market so long. So only two sectors are there in the sideways in the short term, which is auto sector and FMCG sector. The all sectors are in bearish in medium term and also the short term. Reality is 6% down last week. Metal is 12.4%. IT is 4%. IT is holding, which is a sector that was performing and holding the market throughout the rally in the last 2 years. Now it is clearly giving up and heading further deep down in the bearish territory because of the US inflation mostly. Even so, the hike in the price of hike in the currency is not helping the IT sector at all for some reason, because it's overvalued and the value is too much, and then this clear consolidation correction that's happening in the IT sector. So yeah, watch out for the auto sector and FMCG if it's holding from going into the bearish zones or not, but still there is no scope of picking up stocks from the long side because none of the sectors are performing as of now. Sectoral analysis, you can see IT is at a support and clear bearishness can be seen on the momentum side and trend side, and metal, such a big handle of 12% fall that happened last 1 week has taken it from the bullish zones to the support zones and almost breached the bearish zone of the momentum also. You can see auto is holding on, right? You can see FMCG also is holding on. It's at a support zone. Auto is kind of in a bounce from support zone. So auto sector is and FMCG is holding on, but all of the sectors. So you can see that reality also as a cup and hold breakout. It's at a major support zone now. Now you got to watch whether it's negating the breakout of cup and handle and then going further down or not is what we are watch. And pharma is also going into the, it's basically consolidating, but it is down going into a trend line channel. So auto, FMCG has still some hope, but sectors are all bearish, especially IT and metal and reality. If we'll have to see whether it is stopping and taking the support at these levels, or is it breaching down or not in the next coming days. So that's the sector. Let's look at HDFC and given up once again. Major support zones that it was holding is at 13,010 kind of levels, which is slipped and it has fallen below the 13,000, and momentum is clearly on weekly basis it will be a response. So HDFC is giving it up. HDFC Bank, I mean. Now HDFC, the twin brother, also is into the bearish zones and then sliding down the trend line in the weekly. Look at Reliance, it's taken a small support at the breakout zone, but clear bearishness was seen the last 2 weeks with heavy correction, giving up all the gains of a flag breakout that had hardly happened, but it's in a neckline of a cup and handle. So we'll have to see whether it's holding up this position or not. But it's in the sideways still. The momentum has crossed, the trend has crossed over, the momentum is not dropped to the bearish on the medium basis. So there's some hope out there. Index heavyweights, if you see Infosys, additional index heavyweights, if you see Infosys, IT sector is correcting huge, and then it's unable to hold the resistance, hold the supports, I mean, and then giving up. It was the major support zone where the breakout had started in Infosys, but it seems to be giving up, and then momentum has slipped into the bearish zones on a medium term also. TCS shows strength still, although the momentum is struggling to maintain itself in the sideways. It's in a major support zone from where the breakout has happened, ascending triangular ascending pattern breakout had happened. After it went to a consolidation, and this seems to be very good support. So we have to closely watch if it is breaching this support or not. If that, then, but it is relative Infosys, it's showing very good strength. HCC Bank also given up the major resistance zone. Last 2 weeks was big fall, and then now it's at the support zone of this ascending triangle pattern, but from where it had breakout months back. And momentum is at a support zone, so that is, this zone also is very crucial. So overall, certain index heavyweight similar to index is at a very crucial point for up till here it's okay. From now on it may turn out really bad. But look at Mahindra as an exception in the bank stocks. It's showing strength and it's absolutely not worried about what's happening in the market yet. It is currently showing green, and it is basically consolidating in the sideways momentum, right? And it is not ready at all, not even thinking about breaching the support zones from where it has been hovering around this point for very long time. So Kodak Bank shows greenery and shows clear evident downside supports. The only banking sector that may be performing right now is Kodak Bank, right? So ICICI is at the edge. HDFC has given it up. IT is almost done with. If at all there is some hopes that remains in Reliance, TCS and Kodak Bank. Coming to institutional participation affairs, 20,000 crores in last 5 days of trading is what happened. 18,200 and 200 crores of DI buy has not helped to maintain the market up. Derivative side also, it is down move that has happened. Heavy selling of 5,000, 4,000, 2,000, 3,000 kind of selling is what you saw the last week from the Fyers side, the cash, and that's becoming alarming state now. And any further selling from here from the Fyers side definitely means that it is going to get into deep bearish territories, right? And the primary culprit is the US market, right? 2 to 2.5% of correction has happened in all the major indices last week also, right? So Dow Jones, Nasdaq, and S&P 500, all of them has given up. Look at the charts of Dow Jones on the left side. You can see that it has breached a major support zone. And the second support of 32,000 also is breached, but just managed to climb back and close above that. But if that is given, now it's heading to 30,500 kind of levels. Remember, the weekly basis also the momentum has now slipped into the bearish zones. Same with S&P 500, momentum has slipped into the sideways zones. Major support is breached, but it's on the edge of a channel breakdown also. Same with the case of S&P 500 also, it's on the edge of a channel. It has given up the major support. A hammer in all of this is seen. That there are some buyers out there downside, so that gives some hope, but overall clear bearishness in the US market is what is evident. Dollar strengthened further 0.75%. It is making a notice clearly above a 5-year high, or it's moving further above that. From 5-year it is moving to 10 or 20-year kind of high levels of dollar is what you are seeing. Inflation is at a 50-year high in US. So the INR currency pair, if you see on the top, it has made an all-time high. $1 costs 77.5 as of now, which is crazy levels. Remember a few months back it was 75. and 70s, and we are talking about 72s, 75s and all that. Now suddenly we are at a very weak rupee that we are seeing. Crude oil cooled off slightly 1%, but look at where it is. 108.2 is crazy levels above. And imagine crudes were trading near the 60 levels, and now we are talking about 108 since the war started. And so high crude, weak rupee, US markets crashing. But in spite of all that, the gold is also crashing. It's not finding any reason to move up. Look at gold. Crude is cooled off, but look at gold. Gold is crashing. It's unable to maintain and do another breakout attempt. It's not doing that. Right? Remember, the support is where it had been resisting for a long time, and then finally managed to break out from that, but it could not sustain. Did another attempt, and then now it has given up. But despite the fact that the markets, the equity markets globally is cracking, crude is cracking, despite that, the gold is not finding a reason to move up, which is kind of not quite normal, right? Probably that this correction may be not too deep is what people have still belief in the equity market than the gold. Maybe the reason why it's not moving up. Just an assumption. I'm not a fundamental analyst, but just thinking. So two stock picks on the short side: HDFC Asset Management and Whirlpool of India. So you can clearly see that the consolidation is broken. It is a major support on the weekly. It is given up that trend is clearly on the cost down of the bearish and rising 80 extended indicator, and the momentum is clearly in the bearish zones and below 40 on the weekly. So trade has to be taken on a daily basis. We'll try stop loss on this zone where it had taken the support. It may attempt to climb back that, but so top of that would be the stop loss, and then this could give a good reasonable swing trades on the downside, short side. Right? Whirlpool of India also is a head and shoulder. So the entry has to be made the moment we have a red close below this neckline of the head and shoulder breakdown. Right? Momentum is clearly bearish, and on the medium basis also trend is already closed over and it's flat kind of on the, but yeah, there is a big chance that it can break down if this weekly head and shoulder works out. So two bearish picks for the next week: HDFC Asset Management and Whirlpool of India on the short side. Now look at this payoff. This is a bear call calendar spread. You can see that it's giving a good probability of profit and reasonable range also. So the assumption is that 16 to 30 may not breach, and if it's falling down, it's okay. You don't lose money at least, right? And the upside risk reward, if the market moves and settles around near to 16,100, 16,000 kind of levels, then you can clearly get 2% of profit for sure. That way, risk reward is okay, even though it doesn't look like if you're waiting for the market to make the full profit. So get out as soon as you get 2% and portion size as per your capital size, right? And this is risk defined completely, and you know what you're going to lose max in case you don't do anything. You can even adjust also in case it breaches the. But one side is safe. You're not going to lose anything in the market falls down further. That's if that is a fear that you have. So overall, the fear is bearish, but we are also looking and seeing that there could be a chance that market can consolidate at this point. That's what. It's not clearly bearish. It's not bear put, but it's a bear call, and it's a calendar spreads that gives advantage of the volatility also. Let's wrap up. Yes, there's not much change from the last week. It's clear moderate bearishness that we see, because we've seen that 5 weeks we've given up almost 15% on Nifty and maybe more than that on the Banknifty also. Remember that this was after a good retracement and the gap up that had happened, bounce up that had happened for 5 weeks, and then now everything is given back to the market. If I continue to sell, and the VIX is about 23, the fear and greed index, right? And the bearishness evident on the momentum indicator and also the AD extended indicator, and also price action wise, if you see, it's very close to a breaching a lower low after it had made a lower high. Remember a few weeks back, 5 weeks back. So new lower low, lower high pattern is getting formed, and that indicates the market is sliding down the channel downside, right? So there's no other view other than moderate bearishness. And US markets is crashing. RBI had a rate interest hike, which is reason for the plunge. US inflation is at 50 historic high. US dollar is spiking and hitting 5-year, 10-year kind of high. Russia war is still going on. Rupee is weakening to the crazy levels, and the positive factor is that still the DIs are buying and keeping. The retail money is still having belief in the equity market, right? And then technically also there is a CIP, because it's a Change in polarity is possible. Bounce up can be possible because it's maybe retesting a previous major swing low, and then that may be it. Sometimes you never know. May consolidate there for some time, and then decide whether to move up or not. Right. So stay away from the market if the VIX, since the VIX is greater than 23. If you're a professional trader, especially trading in options and derivatives, and hedge your positions. Cut short your position size, and that's all thing that we can do. Risk management, right? So 18,150 above and 38,800 above is what you have to look on. The upside, downside will be 15,650 and 32,100. Any breach of that would mean severe variations that may be coming on the way. So it's on the edge. It's a very crucial critical point from where the market is right now. So don't gamble. So move as per the market is saying you what to do, right? So that's a view market variations. If that helps you to frame your view for the next week in the trade plan for the next week, consider hitting the like button and share tomorrow. Maximum. We have very few subscriptions. I appreciate your help in this regard. Thanks for watching. Happy trading. Happy learning. Bye.